Most business owners think CRA penalties and interest are just a part of doing business, but they're not. They are actually one of the biggest signs that your cash flow system is not working properly. And if your business constantly feels strapped for cash, even though your profit and loss says you're making money, this might be one of the biggest reasons why. Hi, I'm Janet Mercredi, your Profitable CFO, and I help Canadian small business owners make sense of their numbers so they can make better decisions about their time, their pay, and their profit. And on this channel, we talk about all the money stuff that most small business owners were never taught. Hey, it's Janet here. Sorry to interrupt the video, but I wanted to make sure you knew about something I created just for you. I've built a cash flow forecast spreadsheet tool for small business owners like you because most small business owners look at their profit and loss and think they're doing fine. But what they really need to know is, when is the money actually coming in? When are the bills actually going out? And how long is that money in your bank account going to last? And a cash flow forecast answers all three of those questions. So if you want it, the link is in the description box below. You can download it and start mapping out your cash flow so you can see where your business is actually going instead of just guessing. Okay, back to the video. So in today's video, we're going to talk about CRA penalties and interest, but more importantly, what they actually mean inside your business. Because you see, something I see when I'm reviewing business financials for a client are CRA penalties and interest. And to be honest, this is one of the first signs where I can tell whether a business has a cash flow system in place or not. Because those penalties don't just happen, and they definitely don't happen because the business is bad, right? They happen because somebody did not plan for the payment and it didn't get paid in time or at all. Right? So when I'm preparing my reports and I'm working with a client inside my Profit Accelerator method, one of the first things I do is I look at their overall operating expenses. Okay. So just for the purposes of this video, we're going to say that after I've been doing some calculations, I determine that their total operating expenses come out to 86%. Okay. So in layman's terms, how I usually explain that to my clients is that means that for every dollar that came into your business, you're automatically paying out 86 cents. Okay. You still with me? Okay. So sometimes I go a layer deeper and I'll say, okay, out of this 86 cents, 41 cents is payroll. And there are other times where I have to go even a third layer deep and say, okay, out of this 41 cents, 2 cents is penalties to the CRA. Now, here's the thing you need to understand about CRA penalties and interest. They don't mean the same in the tax world like bank charges and bank interest does, okay? Yes, on the bookkeeping side, they are going to show on your profit and loss. They are going to be included in that calculation of your net income or net loss on your profit and loss report. That is true. But the reality is, you're not allowed to claim those the same way as a tax deduction like regular bank charges. So the reality is, at the end of your fiscal year and your tax person, your accountant or your auditor, they go to file your tax return, they can't use those amounts to actually lower your taxes payable. So that just means that in reality, those penalties and interest, they're absolutely doing nothing for your business except draining your bank account. So that's usually how I talk when I'm working with my clients, right? Because CRA penalties and interest, they're not a tax problem and they're not even an accounting problem. But what they are is a cash flow planning problem. As a business owner, you have payroll to run and you know that source deductions come with that responsibility. So if the CRA doesn't get paid on time, that's what accumulates the penalties and interest. So it's not really a bookkeeping issue and it's not really an accounting issue, but it is a cash flow planning issue, okay? Because they're not real expenses. They're more like consequences as a result of the planning behavior that didn't happen. And this is why you've heard me say in other videos, profit on paper is not real profit. And yeah, I'm going to say it again here because when you have to physically make a payment to the government and it includes interest and penalties, you're just paying that money for no reason. Like seriously, for no reason other than to satisfy the government, right? And this is one of the reasons why businesses feel like they're strapped for cash because what they see on their paper does not match what's actually happening in their bank account. And once we understand that those two things are not the same in this case, that's when my role really comes into play when I'm working with clients, right? So now let me be clear. My role is not to tell you yes or no. Unless you want me to, then of course I can. But my role is to give you the clarity around your numbers and your money, okay? So let's just say, for an example, if you wanted to move into a bigger office building, obviously bigger usually means more rent, right? So your expenses are going to go up. You know you're going to be spending more money to do that, right? And that's absolutely fine. Of course you can move into a bigger office building. So then my role becomes, okay, if you're going to do that, here's what needs to happen, right? Here's how much of an investment it's actually going to be. So together we reverse engineer your numbers and say, okay, to do this, you have to have X number of dollars in your bank account every single month so that you don't feel strapped, okay? So that's what I do as your profit strategist. That's what my role is. So I'm going to show you what needs to happen. And then because you know your business better than I do, together, we can brainstorm ideas on how you're going to make it happen, right? How are you going to get that X number of dollars into your bank account? So this is why things like CRA penalties and interest don't usually happen in businesses that have a cash flow plan. Because when the numbers are clear and the plan is clear, the money to make those payments is already set aside before the payment is even due. Okay. So without a system, without planning, without separating the money, what happens is the money sits in one operating account, right? It sits in one bucket and it gets used for all other things. And then when the CRA payment is due, there isn't enough money there to make the payment. So payment gets late. And then now, as a consequence, we're paying interest and penalties on money we already owed, right? So that is money leaving your business without a job. It didn't grow your business. It didn't pay the owner. It didn't reduce your taxes, and it didn't invest in anything for you. It literally just left. So if you remember anything from this video, here's 3 things to always keep in mind. CRA penalties and interest are not a tax problem. They're actually showing you that there's a cash flow planning problem. Profit on paper is not real profit because your bank account is always going to tell you what's truly happening, right? And if money is leaving your business and it doesn't have a job, that's usually a sign that we need a better system. So that's what I have for you today. If you want help understanding where your money is actually going inside your business so that you can build a plan for things like the CRA payments, taxes, payroll, owner pay, they're all planned ahead of time instead of reacting to them. I have a free cash flow forecast spreadsheet that you can download. The link is in the description box. Again, my name is Janet Mercredi. If you like what you're seeing and hearing, I encourage you to like and subscribe to my channel so that you don't miss any upcoming videos. And I'll catch you in the next video.